Hello everyone, this is Corey Mitchell with TradeThatSwing.com, and this is your stock market outlook for the week of July 3rd. Each week I go through this process. You can find this article usually on the first page of the blog, because I go through it each week to decide how aggressive I'm going to be in deploying my capital on swing trades. Before we get started, note that it's a U.S. holiday on July 4th and it's a shortened trading day on July 3rd. Canadian markets are closed on July 3rd due to the Canadian holiday. So each week we go through, look at market health, how the market health indicators are performing, how the indices are performing, how trades have been doing recently, sector performance, and this just tells us how aggressively we want to deploy capital and where. Always, there's lots of watch lists that I post on the website for trade ideas. We have the best swing trading stocks watch list, and this actually should be for July. I just updated this, so it is ready to go for this month. And we have the stock watch list, which is contraction patterns, rounded bottom patterns that are setting up pretty imminently. Haven't updated that in a couple weeks because there were still a number of stocks that were setting up on it. Now, pretty much all of those that were forming have broken out and started to run, so I'll be updating that watch list this week. And then there's these little bit longer term lists that you can also check out for some trade ideas. Best performing ETFs and best performing stocks also show some high momentum stocks. The buy the dip stock list and long term holds are more strong fundamental stocks, which you may find some trading opportunities in as well. Let's look at how the indices are doing. Basically, we pull this up and we have everything in an uptrend, if my computer isn't super slow for some reason. There we go. Uptrend throughout 2023 for the NASDAQ. S&P was a little bit slower to get going, but we have this really strong uptrend since March. Canadian index we'll talk about later. The NYSE, we have an uptrend going since March. You can see the higher lows here. We've been making higher highs. We are moving toward the top of this bigger range that we've been in since late 2022. But right now, at least, moving in a short-term uptrend since March, and also more aggressively since this low here. And the Russell 2000 was quite weak, but even it has, since May or the March low here, started to move up. So we are in a short-term uptrend there, like the NYSE moving back toward prior highs from earlier in the year. So all the U.S. indices are at least moving up. That's good for U.S. stocks. It means pretty much no matter what you're trading, it's at least moving okay. Obviously, we have some sectors and areas, and we'll talk about that a little bit more later on, that are moving better. So technology, mainly the NASDAQ. The S&P composite in Canada, moving inside this big range, moving up a little bit here, but we had been in a downtrend. So I would call this pretty neutral trade. Trade Canadian stocks pretty selectively. Stick to the very top sectors like technology. And then Bitcoin, also in its long-term uptrend. We had this weak pullback. You can see not making much progress. I think we had talked about that in the prior video. Not making too much progress to the downside on each of these drops, and then we had a big surge to the upside. So ultimately, we got to see where this breakout takes us. Is this a flag pattern that continues to run? I think a lot of people are hoping for that. So that's basically what we had just talked about here. Now let's look at the health indicators. Nice strong uptrend, as we'd already discussed. And not sure what went on with TradingView, but it knocked out the name of my thing there. So this was number of stocks in the S&P 500 above their 50-day moving average, and MMFI is how many, all of U.S. stocks, out of all the U.S. stocks, how many are above their 50-day moving average. So we have 64 and 72 on 72% on the S&P 500. That means lots of stocks in short-term uptrends, at least above their 50-day moving average. Generally much easier to make money when that is happening. If you look at prior times when this is below 50%, we tend to have these flat periods or downtrending periods. Volume, not super relevant to me at the moment. This is the daily movement of the S&P 500 in percentage terms, and just however much it moved each day. And you can see downtrends are marked by these big drops, and we have not had any in a long time. So basically this is uptrending type behavior where you have smaller movement, it's less volatile, people are relaxed. This is traders are jittery, investors are jittery, we're seeing big drops, people exiting the market in mass and then jumping back in. You have volatility on both sides. This much more sedate. This is what we want to see during an uptrend. So this is very confirming for an uptrend. The advanced decline line. This is the NYSE advanced decline line. How many stocks are advancing minus declining as a cumulative number. And it was stuck below its highs. You can see the S&P broke above this February high and this May high a long time ago, like back in early June. But the NYSE advanced decline way was stuck below those highs, and we've just got back to them and we're starting to move above. So that's good. It had made this high and has broke above it, and the S&P has just barely got above that level. So this indicator is starting to catch up and is showing some positive signs. This is up volume versus total volume, just shows buying enthusiasm, but we're really only looking for extreme levels, like when the bar is way down here, only 10% of total volume was up volume, or when we reach up to these black lines where that's 80 or 90%, and we haven't been hitting those levels recently, so this is a indicator that's just not showing us much at the moment. Sectors on the move. Big week for real estate, industrials, energy bounced back a little bit. But overall, I think I'm still looking mostly at technology, communication services, the consumer cyclicals / discretionary, and industrials. If we look at the 3-month, those are still our top performers. And they're still performing okay. These ones were more middle of the pack during the week and over the last month. And I did note communication services may be losing a bit of ground here over the last month. Pretty weak, and some of these other ones might be progressing. So like the real estates, financials have been hanging in there. They're pretty much middle of the pack on all of these time frames. So those are also ones to watch. The financials, and yeah, if real estate can keep running like it did last week, that might be an area to watch as well. And again, you don't need to use this. This is more if you're limited on your trading time or you really want to focus in on things that are moving the most and the quickest. Then we can look at the sectors, drill down, and there's an article on how to do that. Just drilling into the strongest sectors to find the strongest stocks within those sectors. And yeah, it can narrow down your scanning time. And what I'm doing right now, if I see setups I like and they trigger, I'm going to keep deploying capital. I like these conditions. Conditions are good. They've been good for quite a while. If we go back to, pretty much May, that was when we started to see some breakouts in the S&P 500. We were on the cusp, and then once we get into June was when you start deploying more capital. I've been deploying capital sometime for quite a while because these have been pretty good market conditions. And then I also like to day trade. We got the day trading stocks, day trading the Euro USD. Don't have to do both, just whichever one you like. And there are courses in how that's done. And then of course I'm always just passively investing as well. And while this process of analyzing the market works pretty good for swing trading, we don't know in advance when this is going to bottom. What this process tells us is just once it's bottomed, start buying. But, this whole drop in 2022 could have gone 5%, it could have gone 20%, it could have gone 50%. We just don't know. So I like to always just passively invest in some index funds, and so that, I always have that money in the market, and over the long term, it's going to produce 10% or more. And so I like just doing that and adding. And then when you look, if you're sort of adding each month, you actually don't end up losing a ton during these things because you bounce back quick. So that's, a lot of people think of that as averaging down. It's not actually averaging down. We are just adding in or deploying our capital at regular intervals, and it's a planned out thing. So we're not averaging down in the sense that our risk is out of control. We're just saying, I'm going to put this amount in each month and as part of my long-term plan. So there's also that passive investing approach. So I like doing all of these: swing trading, day trading, and the longer term investing, so that kind of no matter what the market does, you are covered and have some capital working for you. So that's it for this week, and enjoy the holiday and happy trading.